Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon live webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage. How you doing, Dima?
Good morning, Will. How are you?
Good. Let me share your screen. All right.
Sorry. Today we'll take a look at a vertical spread screener. Well, a screener that will help us detect vertical spreads that are trading in the market, and this will be kind of a little bit. Well, first, let me mention that today we are having a webinar, Will, with Interactive Brokers at 2 p.m. and we'll get deeper into screening for vertical spreads, the credit put spread. So it's going to combine multiple screeners into one. So I'm going to show one right now, just kind of to get it started. But today at 2 p.m., if you register with Interactive Brokers, you could join that webinar for free. But that webinar is hosted with Interactive Brokers. It will not be, live on YouTube like our morning shows.
Yep. So I will put that link in the chat. Everyone must register with Interactive Brokers, and you don't have to watch it live. You will get alerted, and they will send you a link to view it at your convenience if you can't make the 2 p.m. show. But I'll put that link in the chat, D.
Thanks, Will.
Great.
So first, what we're going to do is take a look at how do we detect vertical spreads, and here for some viewers, the idea here is let me show you first a screener, and these are in the screener. What you'll see is individual option trades that are reported by the open feed, and as you can see here, like over here on QQQ, if I go from left to right, some of these trades are multi-leg, right? So here I'm highlighting multi-leg. This was a multi-leg. This was a multi-leg. And what happens is that when you have a trade tape, you get an individual trade and there's a condition multi-leg. And then it's up to you to kind of figure out where's the other part of that multi-leg trade. And then when you gather that information, you go and try to figure out, well, what do I think the strategy was given the information I'm looking at? So you're making these interpretations, right? You're reading the tape, making interpretations. So then you could go further into the analysis. So if you see here on QQQ, I see two multi-leg trades right next to each other, right? One here, that happened, at the same time. And if we look at it, we see that both of them were the same quantity, right? They were same quantity. They were, right here, they're on the same expiration. However, there were different strikes. So once I gather this information, then I could make an interpretation. Well, that is most likely a call spread, right? We have same expiration, different strikes, but same quantity. So that's most likely a call spread because of the two legs and the way it was traded. And of course, it would be difficult to go through each one, because you could see here there are lots of trades going on throughout the day. So you need some kind of software to help you detect these trades and kind of organize them. So that's the first step. And to do that, we're going to go over here under screeners, under multi-leg trades. We're going to take a look at the multi-leg trade screener. And what this does is the software collects this data for us runs the analysis and then creates this multi-leg screener. Okay, so these are sorted by the highest volume. So you could see here in GLD, this detected a trade that looked like either a jelly roll or diagonal double spread. So sometimes it's hard to really figure out. Could be, multiple potential strategies. So this is looking at this potential could be two different, this strategy or that strategy. But here's a put spread, for example, an IWM, the November 21, 226, 230 put spread. So if we were just looking, for example, put spreads, we could come up here, spread type, and we could drop this down. And I'm going to go down to the put spread. By selecting that, now what we did was we're looking at multi-leg trades that we detected were, or by our interpretation, was a put spread. Okay, over 1,533. You could see one IWM we just saw involved 78,000 contracts, and that was on the November 21st, 226, 230 put spread. So you see it has 39 days to expiration. The strikes are $4 apart, and quickly you could see this is the average price it traded at. This was the bid and offer weighted, and this is where the stock price was. Here's QQQ, SPY, and we could just go down the line. And by doing this, we could get insights. What's going on? Where is there a lot of trading activity or big volume? What put spread is there? Are potential traders potentially targeting? And then the prices that it's trading at, and the prices it's trading at relative to the displayed market bids and offers, right? So that's a really quick way of finding those and isolating them, and makes it much easier than having to go and read the trade tape, and try to figure all this out yourself. Because if you try doing that, trying to manually go in there and figure out just 1,500 put spreads, would be almost an impossible endeavor if you're doing that manually all the time. So and over here, you could also, if you're looking maybe for a specific symbol, you could also just type it in here. Let's say Tesla. And now what I did was filter out spreads just in Tesla. So you could see the biggest Tesla's spread involved 1,882 contracts, and that was in October 17, 400, 410, with 4 trading days, 4 days to expiration. Traded for $1.70 with a market 165, 175, and this particular spread traded 77 times. A total 1,882 contracts traded, total of 77 times. So it was pretty active throughout the day. It's not one trade. This spread, was pretty active throughout the day. And the first trade was at 9:31.57. The last trade was 3:55.46. So you could see, like, very early in the morning and almost all the way up to the end of the day, there was trading activity. If we open it up, if we click that open, it's going to load it up. And here are all the different trades. You can see 75 of them. We could tab through, right? And if you wanted to just open one up, let's say here, you click on that and it gives you the details of those legs, and the prices. So what now that we have this, now traders looking for trading ideas or looking for that particular type of strategy. You have the kind of the insights of what other traders are doing, where there's trading activity and trading interest, and where are the prices trading at relative to the markets. So this way, when you're looking at spreads, you have an idea kind of about how to place your orders for better quality executions and price discovery in some of these different spreads. What we're going to do later on today is we're going to take a look at a spread screener that analyzes the spreads in the markets. And in addition to that, we'll be able to filter out some of these spreads that are trading and go into deeper analysis. Well, what do we think the spread is? The spread is worth in theory based on historical stock behavior, based on historical stock return distributions. We're going to look at historical implied volatilities and how those implied volatilities in relationship to each other on different strikes, right? So we're going to take a look at, what was the relationship between these two different strikes historically, and what do we think in theory, the average price was, and the high and the low. We're going to look at, different ways to go deeper to analyze some of these spreads to get insights based on valuation, based on historical success rates, or of this similar type of spread. And let me just show you really quickly. This is the screener we're going to be looking at. Okay, so over here, we're going to combine these analytics. See all these types of analytics, how to screen using these analytics, and then we will be able to compare. And these over here are those traded spreads. Okay, so that's what we're going to do. Is not only can we take a look at the markets and analyze those markets, but we could also compare those to actual traded activity. So I'm going to stop there. I wanted to give kind of a preview of what is coming up later today.
That's great, Dean. We look forward to today's webinar. This is going to be awesome with IBKR. Remember the links in the chat, everyone. You have to register with IBKR to join this webinar and see these features and have Dimitri walk you through them. And that's at 2 today. Unfortunately, I won't be on, so Dimitri will be on with Jeff, and they'll be running the show together. So have a good show today at 2D. Thanks so much for this one. We'll talk to you later.
Yep. Thanks, everyone, and hope to see you guys later. Have a great trading day.
We'll see you at 2D. Thanks, buddy. All right, everyone, you have to register for that webinar via IBKR. I put the link in the chat. Thanks, everyone, for joining today. I am in my last morning in Auburn, about to go out to the Auburn Flapjack House for some pancakes with my son. We had a great tour. It was a wonderful webinar today by D. Thanks, everyone, for joining. Remember, thumbs up and follow us. I see Cincy just appeared. I didn't see him earlier. And also, Michael McRae was in the chat. Haven't seen Michael in a while. Thanks for joining, Michael. If you're new to Market Chameleon, remember you can go anywhere on the site. You'll see these start a free webinar buttons. Click on those and check out Market Chameleon. There's a free 7-day trial. With that, everyone have a great day. Hopefully we'll see you at 2. Remember to register on the IBKR site. The link is in the chat again. Thumbs up. Follow us on all the social platforms. Thank you very much, everyone. Have a great day. Bye.